what would your natural lean be on this trade? Sell side, right? Should be looking to see whether there was enough buyers to sell into and then perhaps a sell side opportunity to keep pressing the markets. If I drew the chart instead a little bit like this, a little bit differently, what's your lean now? It's a far harder decision to make, I would imagine, because the bottom edge has actually been rejected and buyers have come in at higher prices than the bottom edge. So this is a far harder read to make. As the price sticks into a bottom edge, it should really stick into a bottom edge if the sellers are still connected to the deal. But if the price doesn't stick to the bottom edge, if the price doesn't stick to the bottom edge, instead has quite a sizable spring, there's going to be a fair chance that that bottom edge is a full exit, not just a partial exit. Because if it's a partial exit, I know what I would do normally. If it's a partial exit, if I've sold a high price and I've got a short position coming in and I managed to book some profits into this phase here, if I'm still bearish, my first thought is, can I sell back into it as soon as possible? If I've booked some profits there and I've halved my position or quartered my position, I want to try and sell some back into that at a slightly higher price. I don't care how much higher, even if I can get an extra 2, 3, 4, 5 ticks on that bounce. It's been a good decision to make, because that 5 ticks on 100 contracts or 500 contracts in the bonds or whatever is a lot of money. So I'm going to be quite actively pursuing that continuation sell trade. And one would imagine that the sell would be able to make at least a progression. But when we get a very, very aggressive bounce, you've got to ask yourself the question, why did the sellers not come in here? Is that a full exit? Is it completed? Is that a finished auction? It looks like a finished auction. My normal feeling is that we're at least going to try and go up here a little bit to see if there's enough buyers. Whether that then brings a spring trade that then comes back down and tests, we can see that happening in real time, can't we? We can actually analyze that as or if it happens. So when we start seeing some of these elements, we can start to recognize the amount of bounce that the market gave us off of a low print or a high print. And one of the things you'll be able to recognize between these two different balance areas is quite a stark difference in the bounce. In the first balance area, the bounce is touched into the bottom edge and it's just stuck at the bottom edge here. Very, very definitely stuck into the bottom edge. That tells you that the sellers are taking profits. But they're reselling, they're selling, they're selling, they're selling, they're selling back in, and they're selling back in relatively aggressively. When the price then sells off and we get this bounce, and the price comes down and it gives us this little what something would call a minus development concept, there seems to be some upside development taking place in here. My first thought on that is that we're probably going to try and at least see what's above here. Because otherwise, why would any buyer have come in at that price? Either, think about the two scenarios about why a buyer would come in at this slightly higher price. Anybody want to take a chance at the two scenarios? At least have a think about them, guys. Scenario number one is that the sellers that have came in before and they've seen the price bouncing off of this one, they've suddenly realized, my God, it is a definite exit position, and they've aggressively exited. Well, that's bullish, isn't it? If they've aggressively exited at a higher price, that's probably because they're now starting to anticipate the possibility that they're not going to get a lower price. The second scenario could be the fact that that big exit at the bottom has actually started to bring in the process of a long accumulation. It's bringing in the process of a long accumulation. We can start to recognize the fact that buyers are willing to now cross the spreads to pick up that long bit of business, which is also bullish. So there's very, very little in terms of strategies or scenarios that would suggest anything but a possible bullish response to this. And when you get a little spring there and it instantly reverses off it, it's starting to build that case even stronger. And sure enough, the S&P gave us a very, very, very aggressive ride out of that area. Obviously, we've got the last kind of supply coming in at that price. That's your supply turns into demand, yeah? Supply turns into demand. That's the last supply because it did build value down here. If it didn't build value here, that would not have been supply. That would have been a distribution instead. But when it builds something down here, that's supply. This becomes your buy side, sell side level for the day so far. And obviously, when we start building a top right-hand hold here, you can see there's already been a 2 to even 3 transfers of value higher. 1, 2, and then 3. There's been 3 value transfers higher. You're automatically leaning on the fact that you're now going to be expecting this market to go bullish. And based on that, you've now got a bracket measure from the bottom to the mid price and then from the mid price to a target price. Structure becomes incredibly easy to start recognizing. So the bounce is really, really important. The bounce gives us a few more clues about the validity of the bottom edge forming. So when the price comes up, for example, and it sticks into an area and the retest is at the same price, that's probably bullish. That's probably bullish. That's probably bullish. But what is that? That's not a normal bounce away from that toxic sell level, is it? That's not a normal bounce. That's got to be bearish, surely. So when you see that happening and you're saying to yourself, okay, I can see that. So when the price then comes up to test into that, your first thought must surely be to sell into that move. Must be to sell into that move, surely. After you can see that the sellers are easily even accepting this kind of lower print here. And sure enough, the S&P carries on through those prints. Exactly as you would have anticipated by reading that sticky price action at the bottom edge here. Thinking to yourself, well, there's plenty of sellers still in this. So they go for the big sweep, then rattle them straight back down again. And when you see what happened subsequent to that, you can see that this buy side, sell side level still in place, hasn't changed. It just seems to make perfect sense. What is this? Sticky. That's a sticky bottom edge at the moment. So when we see that, we can start saying, okay, I'm still going to be trying to sell into that. But what is this, guys? Does that look as sticky at the moment? Or does it look a lot more rejectionable? Because you build your opinion. In the early stages, that looks like a far, far, far stronger rejection, doesn't it? Far stronger rejection than it did over here. Now, that story can build, remember, it's an initial approach. So when you see that price coming into that area, you've already seen this last test at the lows. That was relatively sharp, but that's not a bounce from a high price. That is already a sticky zone in here. So when you see that rejecting like that, you're thinking to yourself, well, why did that happen? If I had seen a little bit more buying on this red candle here, I would have been quite happy to maybe start looking at a possible buy trade. But because this red candle's basically completely flipped the whole thing over, it takes away a little bit of that bounce value, the value we get from the bounce, because we never saw the buyers at higher prices. The buyers at higher prices that I'm looking for are the guys that show up. So for example, if you see that fast money bounce off of here and it bounces up, and then when it fails to make any attempt to retouch that bottom edge, you start saying, right, I'm seeing buyers coming in. Now I can buy into that and I can take the market bid. I never saw buyers really coming into this. So I'm a little bit disappointed because I think this would have been a reasonable proposition for a possible fly into some long trade here. But just it is what it is, guys. We can't make it up on the right hand edge if it's not there. If it's anyway, we're not far off the cash open in 25 minutes. We'll see if we get anywhere. We've obviously got the oil inventories to pay attention to this afternoon as well. So looking forward to a good afternoon session.